Snipers, you have to see what's happening to the Bitcoin price right now, as our monthly close is in less than 24 hours. And it is not a surprise for those that were tuned into the Snipers channel that we broke below the 2018 previous all-time high after a dead cat bounce and failing to invalidate the Adam and Eve pattern by getting above the previous weekly open. Right now, as I record this video, Bitcoin below 19,000 US dollars. There's a very specific reason Bitcoin is here right now. Look at the Bitcoin CME chart. For the first time, we are coming down, and we are, as I record this video, inside of this CME gap between 18,440 and 19,045. It looks like there is some potential downside still on the table to complete this CME gap fill, and then we only have one more CME gap below this at 9,665. We do not have to come and fill this immediately, so that is not on the table, but I just wanted to put it out there. We also have a CME gap up top at 27,365 and 28,740. Now, why are CME gaps important? Well, I'm just going to quickly show you this CME gap that was at 32,930, and on the 24th of January, you can see Bitcoin had a candle low of exactly 32,930 on the Bitcoin spot price. And then from there, we found a bottom for a few months before we saw a continuation to this downtrend. So CME gaps have in the past been very important for Bitcoin. And so right now, it's very clear what's happening. Nothing to be surprised about for those that have been tuned into the Snipers channel. We talked about this $19,798 level, the 2018 previous all-time high. If we were to cross below it, then that was the major level and a confirmation that we were most likely going to come to fill the CME gap at 18,440. And so we've yet to even get towards 18,440. We're close to it. And so right now, what I would say for the four-dimensional revolving parts, and then we'll get into the live stream for those that are on our live stream. I see we have Johnny on, over 100 people on our live stream right now. Smash the like button for the YouTube algorithm if you support this content, by the way. I believe right now, if we want to assume a bullish case for Bitcoin, what we need to see is Bitcoin hold this higher low. And if it fills the CME gap at 18,440, then we get that out of the way. And this could potentially become a healthy correction where we get back above 20,000 US dollars. But this is the bullish case if we are able to start seeing more strength in the revolving parts. I will mention this for the intraday traders, for those that are day trading the markets. If we look at what happened to the equity markets today, the headlines before noon were that the Dow Jones was down 500 points. And then we saw a slight recovery for the equity markets to come back to test the daily open. And the Dow Jones came back and recovered that 500-point loss before now we're seeing it continue to come down. And so if Bitcoin were to just follow the schematics of what equity markets have done today, there is a potential that we could come back above 20,000, reject the daily open, and then maybe even see continued downside from there. So for those that might want to entertain a short position, or maybe for those that are locked into long positions and entering into positions down at this range, maybe at the CME gap, then there is a potential right now that we could go to 20,000 based on the four-dimensional revolving parts, but that's not guaranteed, of course. I would say that right now, what we're looking at, for me at least, and we'll hear Josh's opinion in just a second, is that we're coming to fill the CME gap. That is quite clear. We're currently inside of the CME gap, and that for the bullish case, we would hope that we at least just form a higher low here, or else if we fail and we start to see candle symmetry in the smaller time frames breach below that CME gap, then the next level of support comes in at 17,204, and that would potentially form a lower low. And so I think this is the bearish case that's on the table right now. And I would be a little bit hesitant to say that Bitcoin is going to come further below this level right now in the immediate short term, unless we start to see the equity markets really fall apart and form new lows. I would say that that would potentially justify that we could see that scenario. But remember, Bitcoin against the S&P 500 has actually been showing a lot of weakness. So another confirmation that we could potentially see a bigger downside move is the Bitcoin against SPY chart breaking this low, and it's getting close to it right now. And so this is something that we'll monitor here on the Snipers channel over the next few days as one of the 4-dimensional revolving parts. And then the Ethereum to Bitcoin chart, as we talked about, came down to test 53,500 Satoshis. This was an important level to watch, and it is still extremely important to watch, because if we're able to hold 53,500 Satoshis, then that could indicate the end of this move. And if we break below it, then now we're potentially talking about further downside. I wouldn't be surprised, though, for Ethereum to Bitcoin to hold 53,500 Satoshis, giving us a gauge that there might be some confidence still in altcoins because of what we saw on the weekly chart. When we came below 53,500 Satoshis, we did get a lot of buy volume that could justify a short-term bottom. So that's why we're monitoring this. I think it's extremely important to watch the Ethereum to Bitcoin chart right now. And I like to use it as a gauge of when Bitcoin finishes its moves, because usually when it comes to a major support or a major resistance, it could be the end of a move for Bitcoin and what the overall market is seeing, because it typically follows Bitcoin. And then the total cryptocurrency market cap also approaching the 2018 previous all-time high. We'll monitor this because we did not break below the total cryptocurrency previous all-time high from 2018. So that's the 4-dimensional revolving parts for now. I'll quickly address some altcoins for those that aren't watching the whole live stream and just watching the replay. Ethereum is now at the midpoint of its range with a resistance of 1165 and a support of $909 US. And so currently sitting right at that $1,000 break even. If we start to see more downside for Bitcoin, the next pocket for Ethereum comes in at $909 US, with also another major level at $780 US. So we could even come down to test this level if we see a lot of weakness. And so that's what Ethereum is doing right now. But I will mention this before I let Josh take the lead. We are not fully down here inside of this CME gap, so there's still some room to go to fill the CME gap. And with price action as I record this video inside of the CME gap, we filled part of it, but we haven't fully filled it just yet. So we could still see some downside right now to at least get that CME gap fill. And so we'll continue to monitor that on the smaller time frames. And right now, Bitcoin flirting with 19,000 US dollars. I'll also mention there is an odd puzzle piece on the table. Even though we're seeing downside in equities and Bitcoin, the DXY is actually down today quite significantly, over 0.2% down. And so you can see we also got a pretty bearish 6-hour candle for the DXY. And so this was actually a bullish puzzle piece that I wanted to bring up, because it looks like we could maybe come at least down to this weekly open to test it, which would give some of the equities and the cryptocurrencies some room to, breathe a little bit, because it's quite obvious right now that it's not getting much room to breathe. And we are now below a very important level here at 19,798. So with that being said, Josh, you want to take the throne and talk about your opinion on what's happening?
My computer is loading a little slow just because I have so many tabs open, but if you don't mind pulling up your chart just 1 second while we have there. Do you have by the way, do you have a horizontal line drawn at 14,149 by chance?
14,000, no, but I have 13,970 as a major snipers support.
Gotcha. Well, I'll tell you what, I might have to do it this way with my webcam, but it's totally fine. Should be able to still see if you guys are having trouble seeing it. But can you essentially see it, or does it?
Yeah, you can go run with it, man.
Okay, so basically the whole thing is, look, we have this horizontal line of support at 20,000, and basically everything we said yesterday and the day before was correct, because essentially, we warned everyone about the double top before there was a double top. And so we told everyone not to go long. The best thing to do was to stay in a short, but we believed that 20,000 was going to hold, and it did end up holding, and we believed there would be some type of bounce, and we did warn you guys that it could be a dead cat bounce. And so since it could have been a dead cat bounce, you can see this is exactly what happened. So it was one of those things I had mentioned, if you go back, a live stream or two ago, you'll be able to see that a dead cat bounce is a bounce. And I said, I'm going to be in and out so quick that it's not going to matter, even if it is a dead cat bounce. So this played out perfectly. And then when I woke up today and I saw that we were below this 20,000 line and we were having a cup of coffee, I knew the next horizontal trend line down with the most confluence on a weekly level was 14,149. And then we have the yellow line that we referred to as well, right in between what I would call no man's land, between the two horizontal blue lines.
We're sure as hell in no man's land right now.
So the whole thing is, what I did is I saw it come up and test the volume weighted average price as support. That's what I saw. It tested the volume weighted average price as support, and that's where I took a short. And now currently I'm about 10% in profit. And I believe that we're going to come down and test the double bottom, because as you can see right here on the 4-hour chart, this yellow line right here. So I believe since Adam and Eve ended up playing out, which I wasn't sure if it was, so that's why you always have to keep a tight stop loss under the market structure. You never want to sleep with the trade still open, especially without a stop loss. And the whole thing is, once I woke up and I saw that it came all the way down here, that's when I entered the short. So what I'm doing is I'm riding this down all the way back to 17.5 is the target. And I might take some profit before then. And we are getting a little bit more of a buyback right here, but there's just no volume to sustain it. And anytime the volume weighted average price, also known as the VWAP, is one of the most important indicators, not necessarily indicator, but moving averages on a daily time frame. And usually when we test it as resistance, that means there's more downward motion to go. And, basically around this yellow line, that's where I would be, taking some profit. So right now, it's fluctuating between 9 and 10%. On this specific short, but as long as it doesn't come up and test the VWAP again or go past it, then I'm still in the trade. So that's what I wanted to say. I wanted you guys just to know also to be careful when you're at these, even though we basically predicted the dead cat bounce, we said, hey, look, we're confident in a bounce at 20,000. Even if it's a dead cat, that ended up playing out. But you still have to be careful, guys, because things can switch on you on a dime. And so the whole thing is, you got to make sure that you have, good stop losses, because it's better to lose a little bit and live the trade another day than to lose a lot. We've all been in that position where we buy the dip and it just keeps on dipping, and so we just try to buy more as have a bailout fund, and that's definitely a strategy. I mean, it's definitely a strategy, and it can work, and it does work depending on how you do it. But right now, we're losing momentum to the upside. I believe we're going to form a double bottom, and then possibly once we form that double bottom, then maybe that would be a great long opportunity. But that's personally how I'm playing it out. I'm in a short right now, and we're going to see how it goes. But even if it comes up and stops me out, it's not going to be that big of a deal, because I'm not using ridiculous high leverage. And my risk reward ratio is huge right now, because it's literally right above the VWAP. And I think there's plenty of room for the downside right now. So that's personally how I'm playing it out. But I just wanted to exercise caution to everybody and let you know that even though the things we were saying ended up playing out, you still got to be careful, because sometimes it's easy to see that dead cat bounce and think it's going to keep going higher, but it doesn't. So you always have to take profit along the way, and then make sure that if you do get stopped out, that you're not losing that much. You don't want to let your trades go too far in the red. And so that's kind of the state that we're at right now. We're having a cup of coffee under 19,000. And so the fact that we're having that cup of coffee under 19, even 20,000, it shows us, as Naeem has said, that it's not the final destination. And so when you also look at it, from a weekly perspective as well, you can kind of, or this is monthly actually, you can start to see the way things really look on the monthly candles. So, hopefully, that's the other thing too, Naeem, is that why don't you talk about this monthly candle close and maybe even this daily candle close under 20,000? That's definitely not going to be good. And the thing is, we kind of warned you guys also about some potential bearish activity, because, Naeem showed us that we tested the 200-week moving average as resistance, which is a huge long-term high time frame moving average. And so anytime we test a big long-term moving average like that as resistance, then that's when things are definitely in bearish activity.
Well, thank you for asking that question on the live chat, Christian. I'm going to address it in just a second, and I really appreciate what you just went over, Josh. I certainly think that there's confluence there with that yellow line that you mentioned, because I have 17,204, and I'm pretty sure that's where that yellow line is pretty much sitting, and that is the range that we're playing in. I mean, if we were to just do the original snipers videos, I would say that the range resistance is 23,795, and the support is 17,204. The red lines on my chart are very significant, the same way that Josh has his blue lines that are very significant. And then you mentioned my thoughts on the monthly open, and then I'm going to answer your question, Christian. But there is one thing that I think is interesting about this monthly close and this monthly open, and that's the fact that if we look at the total market cap, there are some puzzle pieces to mention about how we're closing. And this could also give us an idea of the immediate short term in the next 24 hours of whether or not Bitcoin is going to form new consolidation lows. Maybe a lower low is on the table, or maybe it's not. And I think it's not. And I'll say exactly why. If we look at what happened with the total market cap, notice how this candle high at 761 billion US dollars of market cap is just slightly below the candle low of this monthly candle, which is 762 billion. So 762 versus 761. So we basically tested this previous total resistance as support for this monthly candle. So I would just assume that in the next 24 hours that there just isn't much justification. There isn't much fundamentals right now to back the capitulation of this extremely important level for this monthly candle. But what I will also mention is with the new monthly candle opening up, we're going to have to expect a lot of volatility. Now, that new monthly candle, I think one thing we need to watch, and we'll address this here on the Snipers channel, is whether or not it first wants to come down and breach the 2018 resistance, and now it's breaking it as support, because that could be an indication of way more downside over the next few months. Or is it going to decide that it wants to open up, at least showing a little bit of strength? Because as you can see with every monthly candle, when a new candle opens up, it usually decides a direction, right? This last monthly candle, it decided once it opened up to come down, and it didn't see much price action above the previous monthly candle close. So I think that this is very interesting to watch. To me, it looks like we reached the final destination, at least for this monthly candle. So the next 24 hours are going to be an extremely important time for the markets. And then the same way that that's significant on the total market cap for the monthly close, I would also mention, if we look at this right here for Bitcoin against USDT, the candle low of this monthly candle here from December of 2020, which was a very important month for Bitcoin. This is the month that Bitcoin broke its previous 2018 all-time high and then proceeded into price discovery, right? To eventually top around that $64,000 level and then double top at 69,000. And the reason I think it came back up to 69,000 is when we initially formed this top, if we look at CME charts, we actually left a gap up here around 61,000 US dollars. And then so once we came down, we went back up, we filled that gap up here, and then we came back down, formed that higher high. Some charts formed a higher low. It was a very interesting move to see that second move up with lower volume. And right now I would say, from what I saw yesterday when looking at gaps, the highest gap right now is around 35,000 US dollars. So, you know, CME gaps usually always get filled. We learned that in the 2017-2018 market cycle. Every time there was a gap, even though it seemed like the gap was far away, eventually at some point it got filled. So it's funny because right now we're pretty much at the midpoint of all of the gaps up top and down below. The gap that's down below at 9,500 is 50% away. If we, saw downside, we'd have to go down 50% to fill that gap. And then if we go up top, we're talking about 85% upside. So Christian mentioned something very interesting. I'll quickly just look at it. He says, please, could you compare the downfall from 69,000 to 33,000 and the one from 48,000 till now? It's identical and shows we have another leg down. So that's what I did while Josh was going over his amazing analysis. Once again, thank you so much, Josh. Subscribe to his YouTube channel. The link is in the description below. We want to get Josh to 1,000 YouTube subscribers. So I took the price action and I made a bars pattern that actually follows this downtrend that we saw, this fractal here. And so we're taking the fractal and we're putting it here to 48,000. So if we were to copy the fractal from 69,000 down to 33,000, this is how it would look. And so what Christian is saying is that there's some similarities, and I can see exactly what you're talking about, where we stair step down and then we took the elevator. You can see here we took the elevator as well, and then we consolidated, and then we started to take the elevator again. You can see we took the elevator here, consolidated, and then another elevator down before we did see upside. So, based on that fractal, it's looking like, we come down towards that $13,000 to $10,000 range. The thing is that sometimes, though, the markets will do the complete opposite of what traders expect. Fractals don't always play out. And I would also mention this. I don't think that we've completely lost this consolidation. I don't think we've completely lost it yet. And the reason I say that is you could argue that Bitcoin hasn't come below 20,000 US dollars too many times. Not, so far on the spot price against USDT, it's come down below 20,000 twice, right? But on the CME chart, this is really the first time we're getting price action down at these levels. So this is really the first test where, ideally we would at least get a bounce. So I think that we're still inside of that consolidation because, when we initially came down to 17,500, it was during the weekend, so we didn't get to fill the CME gap. So it was almost as if at some point, I said this in many of my videos, that we have to most likely come back down to fill that gap because the order books have already opened itself up to fill the gap. But the problem is it opened itself up on the weekend, which we know is the most manipulated because CME futures are closed. And I always say this on the channel, and this is where it matters. And so we opened up the order books to this price range, but we didn't fill the CME gap. And so this right now, what's happening is actually extremely healthy because if we do continue further up now, we at least filled the gap and we don't have to talk about this gap anymore. And then we have a gap all the way down at 9,000 that who knows when that's going to get filled. It doesn't have to be filled in the immediate short term. That's just a gap that's there. It might not ever get filled, right? These are not concrete rules, but I would say in the immediate consolidation that we're in right now, it was quite justified for us to come back down to fill the gap because we already opened up the order books to that level. So why wouldn't we come to fill the gap? It would almost have had been a waste to bring Bitcoin down to the price of the gap but not get it filled. And so I think that we're still inside of this consolidation. And so if we're still following this fractal, I think that there's still, we don't have a confirmation yet that this is the move, especially with equity markets yet to form further lows. We are coming into a 3-day weekend. And so we've already learned that the weekends are the most manipulated. Let's see what happens. I think it's Independence Day, right? On Monday or something. There's a holiday on Monday. So tomorrow's going to be our last day for equity markets to be open. I don't know if it's closed tomorrow. I'm pretty sure it's closed on Monday. That's the day of the holiday. So, we'll have a 3-day weekend. I from the past 3-day weekends, I think we've seen quite stale price action. I remember in 2018 cycle, every 3-day weekend was insane. So much volatility, but hopefully that answers your question. And then I don't know if you have the chat pulled up, Josh, but PulseNet says PCE numbers are more important than CPI numbers. So we also have CPI numbers coming out, I believe, on Thursday of next month on the 7th. And so that's going to be important because people are watching inflation data and they initially thought that it peaked out, and then we saw one lower reading, and then I think this last month we saw the highest reading, and so it didn't peak, and now people freaked out. We saw continuation of the dump, and so I think that's something important to keep in mind. DAP phone says Bitcoin's going to 11,000. Richard heard.
I got the chat pulled up now, by the way, if you want me to man that.
Yeah, man, go ahead if you want to.
Just because I know you got a lot pulled, that you're doing. So basically, let's see. This guy's Johnny G said things are looking grim. Sentiment is the worst. Only diamond hands left. Yeah, I mean that's why I'm in a short right now. Things aren't looking that good. Let's see. Someone's saying something about your flabby body pic. They must be referring about the one before you started working on it.
Yeah. No, I mean, I can take the shirt off right now if you need me to. Trust me. But I'll tell you what, our views skyrocketed when I changed that profile picture. So that's the only reason I kept it.
Thank you so much for analyzing it. Appreciate the content. Yeah, the thing is about Naeem is, you're not going to see this analysis anywhere else. I mean, there's no one that does that type of comparative predictive analysis. And, which speaking of that, I'm glad that they brought that up. So what do you kind of see happening, you think in the immediate short term and then obviously in the long term?
I'll tell you what, man, our long position that we took at 20,000, the reason I entered into that position was because this was really the first test coming down, and I knew it was going to be a potential dead cat bounce. And so that hit its first 2 profit targets. I set my stop loss to break even, and I waited to see whether or not we were going to invalidate the Adam and Eve by getting above. I think somebody in the chat yesterday asked this question, and it was extremely important that they asked this question, because they said, Naeem, what would have to happen if the Adam and Eve pattern were to be invalidated? I said, well, the only way this could be invalidated, which an Adam and Eve pattern is basically a sharp initial top and then a retest of that high with a failure and a slow regression down. So that's the Adam and Eve pattern. This is a bearish pattern. The neckline down here, once this breaks, you can pretty much get the target by taking the top to the base and then dropping that down. And so that would validate the CME gap fill. That would validate everything that we've been talking about. And so it was important that we found out how to invalidate this. And I said the previous weekly open was what I was waiting for. And because we didn't get above that previous weekly open, I knew, okay, this long position is probably going to be short-lived. This is really a dead cat bounce. And now that we came below, I mean, it's not a coincidence that these price levels are on our charts. You can see how significant they are in the 3-minute chart. Just notice how it was only when we reached the 2018 previous all-time high at 19,790. I always say the exact number is the most important, because it's not a coincidence that our candle low when we saw the volume and then our candle high when the actual volume came in was 19,800, within $2 of the actual price. And in percentage, that's like 0.1 or 2%. That's why on the Snipers channel, smash the like button for the YouTube algorithm. We always give you guys the exact numbers, because the exact numbers do matter. That's where the volume comes in. These are the confirmations. That's what we're waiting for, right? And so once we came back down, it was already the scenario that we talked about initially, which if we break this level, then it's almost guaranteed that we come down to fill the CME gap, because it makes sense and it actually wouldn't be a bad thing. I am not disappointed that Bitcoin is filling this CME gap so that we can stop talking about it and get it off our charts and get it off our mind. Because if we come to fill the CME gap, now we can make an argument that we have reached our final destination, right? And so I want to see the CME gap filled at 18,440. I want to get it out of the way. I'm not worried about the $9,665 CME gap right now, because we could very well fill the CME gap at 18,440. We start to see the sentiment in equity markets shift, right? It's a new moon. And then maybe we come up to fill the $29,000 CME gap before we see any further downside. And then we come and have to reevaluate the situation from there, right? So I think that right now what we're seeing is just pure garden variety market behavior. It's what we've been expecting. And the reason we're doing these live streams with you guys is because we've already talked about this scenario happening, and now we're just seeing it play out. So I think it's now important for us to be right by your side to talk about the fact that it's happening and we shouldn't be worried about it. We shouldn't get fearful about it. And, you know, it very well could be an opportunity to go long here. But once again, you know, I'm not adding into any long positions here, at least with margin. Of course, the dollar cost averaging long-term portfolio, that's a whole other conversation. We've all heard it. You should always be dollar cost averaging into assets that you love. Rusty says, really, Naeem, still with the flat. Oh, just Christian, thank you so much for analyzing. I appreciate the content. Thank you so much. Let's see here.
So somebody just said in the chat, I think we should wait till 80% as usual with BTC correction. That's interesting that that he mentions that, because, you know, Naeem, you actually asked me the other day, you said, like, when do you think is a good time to start DCAing and to hodl, right? It's so funny because Bitcoin.com just published a news article saying that Robert Kiyosaki, which, by the way, guys, isn't the best at price analysis.
No, he's not.
This guy bought, you know, Bitcoin at 20,000 back whenever it was 20,000, so that didn't work out very well for him. But Bitcoin.com just published an article saying that he's basically waiting till 1,100 per Bitcoin to buy more. So he's going to be waiting a long time, I think. But I mean, hopefully he'll be waiting a long time. Hopefully it never gets there. But the whole thing is, guys, is yeah, like for me, I don't think, like right now, I'm not even DCAing in. Like I'm waiting for confirmation of a true absolute bottom, not a local bottom. And then, because once we hit our destination, we immediately turn back around, right? And so, right, that's another reason why I'm in a short right now, is because we haven't hit a bounce where we immediately turn back around. And so the whole thing is, until we do that, which I believe could be the double bottom, which ironically enough, if we do a double bottom, that's going to be right at exactly, the golden yellow line that we always talk about here on the channel that has the most confluence. It's arguably the single most important line on the chart due to the amount of confluence that it has. Man, we're tanking though right now as we're talking.
Well, here's what I'm looking at. I think that it's
probably not good for others right now.
I love what you're saying, Josh. And I'll mention this, equity markets are actually starting to close. What is it? Almost 4 p.m., 15 minutes till equities close. And just notice the schematics here. If as long as the Bitcoin SPY chart does not form further lows, then what we have here is a daily open, a dump, a retest of the daily open, a rejection, and now a consolidation. And so if Bitcoin were to just follow that, at least in the immediate short term, for those that are day trading right now, then that justifies Bitcoin getting to 20,000 again by the candle close at 8 p.m. Eastern Standard Time in 4 hours. And so this is justified here. I think that it would be nice to just come and fill this dang gap here before this happens, because we want to get that gap out of the way. Hamal says, Josh, you didn't finish your thoughts on 80% correction.
Yeah, I was just saying, like regardless of all that, and by the way, guys, we told you that it was very likely that we were going to get a dead cat bounce at 20,000. We didn't say it's going to be the absolute bottom. I mean, it's almost impossible to tell the absolute bottom or absolute top. So we said, even if it is a dead cat bounce at 20,000, we're going to be in and out. If you just go back and watch, we said we were going to be in and out very fast. So hopefully you guys took that advice if you did go long. But at 20,000 being such a critical level, as it reaches the 20,000 mark and has a cup of coffee, then obviously, that's a short opportunity. Let's see, didn't finish your thoughts on 80% correction. Well, that's basically it. I mean, I don't care. I mean, I'm not too hung up on the numbers, 80% correction, 95% correction, et cetera, et cetera. What I'm more looking at is market structure, and I'm not going to be throwing any spot positions. I've got a lot of money right now sitting on the sidelines waiting for the perfect time. And thank God that's been my strategy, because if I was buying spot all the way down from even 30,000 to now, I mean, I'd be eating a brick, right? So I'm not too worried about the 80% correction, 90%, 100%, whatever it is. Robert Kiyosaki's saying something crazy right now.
He's always saying something crazy.
What I'm looking for is confirmation of an absolute bottom, or what I believe to be an absolute bottom. Once again, it's almost near impossible to tell. But as with everything, it's all about patience. And so the whole thing is, you got to have the patience, and as long as we're continuously making lower lows and lower lows on the macro, then it would be, in my opinion, silly to start DCAing in now.
So, I love what you're saying, Josh. I'm looking at some altcoins right now. We've got a pretty mixed market here, and we did see altcoins initially pump at some point. And Ren says, damn, you guys can't be trusted after last night's call. No, we hit profit targets. Our long position at 20,000, we took the long position at 3 a.m. at Asian market open, and it hit its first two profit targets. It reached 20,460. I was inside of the long position, and that was what we were talking about. And I clearly said to you guys, as Josh has been saying, that there is a very high likelihood that we come to fill the CME gap, and we knew the confirmation of that was breaking below 19,798. And I will say, though, the one thing that I did mention yesterday is that we were just asking to at least get a test of 21,000. That's what I was hoping for, to take profits off of my position. But I got out 50% of the position by the time we hit our first profit targets. I left the rest in, break even stop, and I was hoping to take the rest of the profits off the table, at least the other 50% at the weekly open. We didn't get that. Stop loss at break even after making profits got hit, and then the scenario that we talked about came on the table. And I also mentioned one thing to watch is the invalidation of 20,574 to invalidate the Adam and Eve pattern. We didn't get that confirmation as well, making the Adam and Eve pattern still valid. And so, you have to realize the markets are like water. Bruce Lee says, be like water. Adapt and conform to the cup that you get poured into, right? So if you're in a square cup, turn into a square. If you're in a round cup, turn into a round, shape. And so it's dynamic is what I'm saying. You have to be adaptable. You have to be ready to move and change and understand that you're only trying your best. It's like the weather, right? That's why I love technical analysis. It's like the weather, right? There's a 50% chance of rain today. There's a 20% chance of rain today. There's a 50% chance of snow today. That's technical analysis. Fundamentals are a whole different story. But the three most important things is, number one, the overall trend, because the fundamentals will typically back the overall trend on the technicals. So there could be negative news, but if you're in a bull trend, you're not going to hear about that negative news. That's why the fundamentals don't matter as much. That's why you shouldn't be watching the mainstream media. It doesn't matter. The charts are what matter. The charts give you the answers. And so, and beyond that, right, when you're starting to see us in a downtrend, you start to exaggerate and see more of the bad news, even though there's still great news, right? Bitcoin's hash rate hitting new all-time highs. While we're in a bear market, we're not talking about that though, right? We're talking about the bad news, right? And so it's just yin and yang, right? You have to wash out the bad players. You have to clear out leverage. It's the same thing in every market. And you're going to hear extremists, and there's always extremists on the left and right, right? China came out the other day in the media saying that Bitcoin could go to zero because it's a highly leveraged market by the Western world. And that's the same thing we've heard for years and years and years. Here's what I know for a fact. The Bitcoin that I bought 3 years ago at $7,000 is still over double its value in profits. And it has been the best hedge against inflation after what happened in March of 2020. And there's not one asset class right now that increases your buying power during times of distress the way that Bitcoin does. And it is still the greatest asset in the world. And it is still what, $18,000 right now, which people are saying, oh, it's the same price as it was 4 years ago. No, it's not, because 4 years ago it was at $20,000 for less than a few days, right? So no, it's not at the same price. It was actually, if you look at the VPVR, it'll clearly show you right here that, yeah, if you have just entered the market in the last 2 years, you deserve to go through a time like this. Because we went through this in 2017. I've been in this market even prior to 2017, but we started making videos on YouTube here on this channel, youtube.com/snipers. Every single day. We haven't missed a day. We've missed, maybe a midnight and then posting it the next day. But every single day for the last 5 years on Bitcoin, right? And so, if we look at the VPVR, where is the majority of volume? Down here. People got in at 10,000, 7,000. I remember this was way before pandemic, we used to sit with these kids. They were 18, 19 years old, driving Lamborghinis, doing over-the-counter transactions for international clients. And they were just buying Bitcoin up for 10K a piece, right? I want 50 Bitcoin. All right, cool. $10,000 each. Bam. People accumulating, the people hedging. And guess what? They're still all in profits. Their buying power has still been increased despite, here's the thing, like if you were to, because people say so much of an inflation hedge. Yeah, if you were in the market for if you just got in the last 2 years, yeah, obviously it's not an inflation hedge, but you don't deserve to have the inflation hedge because you weren't in time. Now, does that mean the next 5 years is going to be negative for those people? No, I believe Bitcoin has not topped out, and that in the next 5 to 10 years, Bitcoin will be above its current all-time high. And those that are in the market right now are going to realize, man, this was an inflation hedge. And so, you can't let the markets fool you. And so the other thing is, so volume is here. It's volume's down here, So, there's no other asset like this. If you had all your money sitting in, let's say, Facebook stock, let's see how well you'd be doing right now. If you had everything in Meta, guess what? You have less buying power than you did 3 years ago. As a matter of fact, you have just as much buying. Look at that. We're back to July of 2017 prices. Let's say you bought Bitcoin in January of 2020 and you bought Facebook stock in January of 2020. If you bought Facebook stock in January of 2020, you have already lost 27% of your buying power. If you bought Bitcoin in January of 2020, your buying power would currently be still double what it was from January of 2020, 100%. And so the best asset in the world, I don't care what anybody says, if you got in the last 2 years, that's great. This is why you're watching this live stream. This is the opportunity of a lifetime, in my opinion. And so don't be surprised if we see another 50% correction. So prepare for that. But what I am saying is, this is still the number one asset in the world, in my opinion.
And that's the thing I wanted to say too. It's like we told you at 20,000, there's a high possibility for a dead cat bounce. If you didn't, take profits during the dead cat bounce, then that's on you. That's not on us. Like we're giving you the best times to enter and exit. And the whole thing is, you got to take profits, guys. You have to stay disciplined if you're really trading this stuff, especially on leverage. I mean, there's an old saying that says no one ever went broke taking profits. And so we're always going to give you both sides of the coin, because at the end of the day, it's called technical analysis. You must analyze. There's always going to be the bullish scenario. There's going to be the bearish scenario. You want to simply use, things like this as indications, things like Naeem is saying, or I'm saying, as indications, and make your own choice. But the whole thing is, you just got to remember to always take profit. And then right now, like I said, I'm in short, and that's doing well because of the volume weighted average price. And so I'm waiting personally. I'm probably going to close my short around the double bottom, 17.5, somewhere around there. I might shave off some profit, before that. But you just got to understand, like, it's up to you guys to take profit, because no one's going to hand everything on a silver platter for you. You have to make your own decisions and be an adult and kind of just treat it in that respect, And the moment that we started dipping below 20,000, that's obviously a sign of bearish activity. So that's a clear indication to go short. And I know it kind of happened when a lot of us were sleeping, but that's why you never want to leave a trade, even if you're a little bit in the negative. You're like, oh no, I don't want to leave this trade open, or I'm just going to leave this trade open. I'm only a little bit in the negative and go to sleep. That's never a good idea, because when you wake up, you're either going to be liquidated or stopped out, etc. And that's why we had a very tight stop loss without much leverage. So that's really the whole thing to understand, guys. Don't go crazy on leverage, especially during a volatile time. And you either want to wait for a breakout or a breakdown. And only once you have confirmation, which is what we told you guys, wait for confirmation. That's whenever you make your move. So the moment we had a confirmation of a breakdown from 20,000, that's when you should have been short.
Abdul Raham says, any update regarding the USDT inflow to exchanges? I saw a tweet talking about the USDT market cap declining 11% since the top of Bitcoin, and there is around 25 billion USDT waiting in exchanges. So here's what's interesting. You hear everyone say Bitcoin's the same price as it was 4 years ago. And guess what? 4 years ago, the USDT market cap was at 800 million. Don't quote me on that exact number, but I believe it was less than $1 billion 4 years ago. Right now, the USDT market cap is, don't quote me on this, but it's like 100 billion. And so, yes, there's a lot more cash on the sidelines, right? And there's a lot of things that have matured about Bitcoin since 2017 and 18, right? One of those things is the average size of every transaction is now over 100,000 US dollars. It wasn't like that in 2017 and 18. And so a lot has matured. Somebody said, Michael Saylor accidentally said, when Bitcoin hits 3,000, I'm pretty sure, I didn't watch the Crypto interview, and Chris is a good friend of mine, but I'm pretty sure Michael Saylor said when Bitcoin hits 3,000 is when he would get liquidated on his margin and his leverage that he took out, the 250 million that he took out of billions that he holds in spot. So he probably, I would call that fake news. He's not saying when Bitcoin hits 3,000. As a matter of fact, Dallas also said we've been in one big bull run. This is the first real bear market. The COVID crash doesn't count. Buy at 3,000. I have two thoughts on that. Number one, the COVID crash actually did count, and the importance of the COVID crash to me was it gave us the answers to what the best and top assets are for the next 10 years and the next decade. That's what the COVID crash did to me. It gave us the answers. It's like there's a quiz, right? What are the best assets, the top performing assets in the next decade? I believe what we saw during the COVID crash was the answer to that, right? Because when the feds were buying up junk bonds, they were throwing in liquidity to companies like Facebook, Amazon, that didn't need the cash injection, but because they were getting the cash injection, the markets perceived it as positive but they weren't using the cash that the feds were injecting and buying with their junk bonds. No, and the feds didn't go out and buy ExxonMobil. And no, they went and they gave us the answers to the best assets in history. So that's why I love what happened in COVID, because that's the answers to the quiz. And so once, this bear market, if it may already be over, we don't even know, right? But once, here's the thing. All assets have lowered in price and everything in the real world has increased in price, right? Why does that happen? Because markets are forward looking. So the first thing that got inflated was the markets, and they were expecting higher prices in the real world. Now there's higher prices in the real world, so the markets forward looking once again go back to normal. And so you have to understand what's happening right now. What are the Feds trying to do? They're trying to bring things back to normal. They're trying to fight inflation. That's one of their jobs. And so the second thought is, we've been in one big bull run. I disagree. No, this was certainly a bear market here. From December of 2017 and on, this was the longest bear market. Trust me. I remember being in Arizona actually with Josh. We were both speaking. You weren't speaking on crypto. I was speaking on crypto. I remember November of 2018, we were on stage speaking about crypto at a conference. And then, later that month, we were on the stage with Steve Wozniak in Vegas. And Bitcoin was sitting at 6,000, 3,000. I was still preaching about Bitcoin. I was still saying Bitcoin is the future, right? And so I lived the bear market. Remember Chain Exchange, Mandalay Bay? We had like thousands and thousands of seats, and there were like hundreds of people. It was like empty because it was in a bear market, right? So no, we've been through a bear market, right? And typically the indication of a bear to bull cycle is when you're re-entering into a price discovery phase, right? So I would argue that we are still inside. In the macro, we are we could be in a bear market, but we've already passed through a bull market when we broke the all-time highs. Bull market, I would argue this was the bull markets are usually short, right? The bull markets are very short. So I would argue this right here was the bull market, and then the higher high was just fugazi, right? It was this right here was all fugazi. It was to fill the CME gap. There were reasons that Bitcoin had to go up. I actually said this before, and I think another reason it went up. And Brock Pierce, when we were with him, one of the founders of EOS, the chairman of Blockchain Capital, he said to us, this next cycle, this was back when Bitcoin didn't break its all-time high. It's in this next cycle after winter is over, it's going to be a lot more graceful to investors. And I think one cool thing about the higher high is that for those that entered in around 10,000, I had some positions as well that I entered in around 7,000. I didn't take profits on the initial high, but I did take profits on the higher high because I was able to trigger my long-term capital gains versus getting triggered short-term capital gains. It didn't make sense for me to take profits on that first high. I knew we were going up. I didn't know what the target was, but on that second high, I was like, okay, we're obviously reaching a previous top. I knew, and I told many people that I advised this, Bitcoin's either going to form, and really it was when Bitcoin broke back above 50,000 that I knew it was going for a higher high. But I was like, Bitcoin's either going to form a lower high or a higher high. And when we came down and we broke here, I was like, okay, I know what's going to happen. This thing is going to fake everyone out. People are going to think we're going to 100K. And I've said it in many videos. Go back to my videos and watch. I said, this is going to form a higher high. And why is that justified? Well, now that it's back at these highs, any investor that got in right around this area can now sell, but trigger long-term capital gains versus short-term capital gains. And so instead of getting taxed 39%, now they're getting taxed, let's say, 21%. And so I thought that was very interesting. The markets really gave us the hints. I just came back from the gym. That's why I got sweat in the arm. All right. Anyways, let's see. You said if ETH broke down, it will go to 900. It will go soon to 900. Yeah, well, Ethereum's range support right now is $909 US. And so that's the range that we're in. That's where we're, that's the next place of volume. 909 is the next target. And if we breach below that, 780 comes on the table, right? So like for a first test of 780, I'd probably take a long position. I'd start entering into dollar cost average spot entries there. So what's the lowest unfilled CME gap? 9,665. What's up, Josh?
I was going to say, I just noticed you also have that line drawn at 14,000 because that was right after 20,000. That was the next support. which was the previous high. So right around 14,000, you have a long drop as well. And that's really what I see. You know, if the yellow line doesn't hold us up at around 17,000, then I'm definitely seeing 14,000 as a possibility. And it's only because when you zoom out, you'll find out that that 14,000 level is literally the top of the second bull market after, or the second high after 20,000.
Yeah, and interestingly enough, Celsius was just actually denied an acquisition by FTX. And apparently FTX saw their balance sheet, and the rumors are they were like $2 billion in the hole, and they said, no, we don't want to acquire this. I think they're acquiring BlockFi now. And what's very interesting about that is Celsius right now, if Bitcoin comes down, I think their WBTC position liquidation price on MakerDAO is at right around this level here, 13,000. And so unless they bring that liquidation price down, which they have been, initially the liquidation price was like 20 something, and they keep bringing it down. If we were to argue what narratives behind this downside, maybe that argument is that there are bad actors trying to liquidate Celsius in opposition of interest-bearing accounts, whatever it might be. Then we could argue that Bitcoin does come down here, because at that point Celsius gets put into a very, very tight position, and it's quite concerning what's going on with that situation still, because we still have not gotten answers and people still are not allowed to withdraw their money. And this is a US-based interest-bearing account company, right? It's the first time we're seeing a US-based company in hot waters like this. And so that's certainly going to bring Gary Gensler and all those guys up to talk about it and, try to enforce action and use it as a narrative for their agenda. So Christian says the 9,665 will be the ultimate low. Yeah, but the question is, when's that going to happen? A year from now, 2 years from now, maybe 3 years? I mean, or next month, tomorrow, right? Imagine tomorrow.
Dude, let's hope Satoshi doesn't wake up and find the private key to his wallet.
That's hilarious, man. So,
says, will BTC go up? Since 20,000 didn't hold, and we're having a cup of coffee below 20,000, I want to, as much as I want to say, $69,000 Bitcoin in the next, 5 weeks or even 5 years. I mean, I just don't see it. The thing is, it takes the stairs up but the elevator down, right? So right now, I'm not really gonna let's put it this way. 20,000 was the most obvious place to go long. Now that that's broken, and we did warn you guys about the dead cat bounce, so hopefully you didn't stay in a position, because we tried warning you. We said, look, if this 20,000 doesn't hold, it's a dead cat bounce. We're going to be in and out very quickly. But the whole thing is, so now that we're having a cup of coffee below it, I mean, I'm up, I'm still around 10% or so. It's, 10 to 12% fluctuating right now, but there's just no buy volume, so unfortunately I don't see it going up really anytime soon until we hit that double bottom. Once we hit that double bottom, that'll put us right at the yellow line that we covered last time. And then that's going to be, if we don't hold that, now that we know that 20,000 isn't holding, 17.5 really is the next spot. If that doesn't hold, then we're going to 14,000 for damn sure, just because that's the next line of support. So it's an interesting time right now. A lot of people were expecting 20,000 to hold, but you have to always prepare for the worst, and you just always got to make sure to set alerts on your chart. So that way, if, you could set an alert for, say, 19,000, 900, 19,000, 800, whatever. As soon as that alert gets triggered, you can observe it to see what's happening and enter, and however you want to enter. And unfortunately, right now, guys, we're not in a bull market. I can tell you that, unless we're at the very, very, very beginning of it, which honestly, this double bottom could serve as a bull market. I mean, I'll tell you what, if we don't hold above this yellow line, keep showing you guys it's very, very bad, then we're definitely most likely going to 10K, something like that. So let's just hope that we hold at 17.5, and if not, then I don't know what else to tell you. 14,000 is the next target. Now the 20,000 didn't hold. So
yeah, I think there's a high chance we fill that CMB gap at a minimum. And man, Grayscale Bitcoin Trust is not looking good right now. It's selling off into the close. forming new yearly lows. That's not what you want to see, right? So we got to look at the downside target, 17,240 or 204 right now. That's the range support where there's going to be some volume, and we need to fill that CME gap. So there's no surprise for us to come down further right now. Is this a time to take a long position? I don't know. What do you think, Josh? Would you take a long position at 18,440?
No, I would not. I would wait till 17.5 before I consider taking a long. And even then, I'd have to seek confirmation. And that's the other thing too, guys, is we told you to find confirmation. So like when you're dealing with known support and resistance levels, you still have to wait for confirmation. Kind of like the whole 20,000 thing. If you go back to the video, you'll see we said don't just go into a trade just because it hits 20,000. You want to wait for confirmation of a bottom, even if it is a dead cat bounce, and then get in, right? So we never fully got that confirmation of a bottom, and it was a little bit of a fake out instead of a breakout, and then from there we don't. So you just got to make sure to see which side of the trade that you're on, and if you're in the middle, basically like the whole thing is, I'll see if I can share my screen like this one more time. But let's see, hold on.
All right, I got you on full screen.
Basically, yeah, guys, like we're so close to this blue line right here, and if you have trouble seeing it, just let me know. But we're so close to this blue line of 20,000, and we're having a cup of coffee. That tells me that the most likely target's going to be around 14,000 because we've already breached this level. So I'm just going to play it safe, and around 17.5, that's going to be where I close out the short. But I just don't see it going much higher because we came and tested the volume weighted average price as a resistance. And so, the best case scenario I think that could happen, is that we come and hit 20,000 again and test it as resistance and then fall back further. I know it's kind of a harsh thing, to go over, right? But it's just the truth, right? And if we did come back up and retest 20,000 as resistance, and that would also further validate the Adam and Eve pattern. So that is a possibility. I'm just kind of betting against it a little bit right now. We're just saying, hey, I think we're going to double bottom at 17.5. So that's what I'm personally thinking right now, because we've already broke the neckline of the Adam and Eve. So it's like classic technical analysis would show us that if we broke the neckline of the Adam and Eve at 20,000, the next target 7.5. So, and that's even if we do test 20,000 as resistance again.
I love it, man. So to round it up, Bitcoin right now, most likely at this point, as it is sitting inside of the CME gap as we speak, is going to complete the fill here. So that would assume a little bit more downside to 18,440. And from there, who knows? If we break below that with volume, I think what's going to be very important to watch is volume, of course. And on the smaller time frames, we've yet to really get true volume. But what we want to see is, if we come down to fill that CME gap, what we don't want to see is just large spikes of sell pressure without buyers buying it up. Preferably what we want to see when we start to see this move is something like this, where maybe we see a large amount of sell pressure and then a good amount of buyers in bulk coming in to buy that dip, or even better, it's to see institutional volume buy the sell. And so the way that would look is a larger candle of volume, which we haven't seen in a while. If you look here, we have not seen that in a very long time, at least in these smaller time frames. It's quite concerning right now that I cannot even find an example. I want to find a good example, and I cannot find one. So that's why we've been selling off, right? As these large institutions sell, we're not seeing institutions come back in to buy. So there really is no good example here. And I say there's no good example because, like, every time we're getting these large spikes of institutional sell pressure, the buy pressure is less, which means that institutions are still not confident in these these buys, right? And so, I mean, this is a lost cause here. I'm gonna get dizzy just looking for it. So, we're gonna watch the volume, but I think it's very justified to come down. Now, there's still this scenario in the intraday time frame to follow the schematics, especially because it's a monthly close today. In the next 4 hours, I think that there's still a likelihood that we could potentially move back above 20,000 to test the daily open. And so I still think this is on the table. This is something to monitor because the S&P 500 during its intraday session today did exactly that. After it sold off, it went to test the daily open. And so it's not a surprise for that to happen. And so that's why it's quite risky to I would say to short unless we get the test of this. And once again, when you break major support, what usually happens, you at least come to test it as resistance. So, I would say that testing the 2018 previous all-time high, but not getting to the daily open, if that were to happen, shows weakness. But if we can get to the daily open, that's good. So far, though, over the last few days, Bitcoin has been a lot weaker than the equity market. So that's why I have an alert I just set right now of the Bitcoin to SPY chart. I don't want to see this low get breached because that's going to be my first confirmation that, okay, maybe a dump is coming here for this new monthly open or this monthly close. This is abnormal activity. This is not what we want to see. Because so far, there's no other puzzle piece that can give us an earlier confirmation. I mean, it doesn't look like the equity markets are just going to breach this recent consolidation low during futures markets, right? Futures are low volume. So I think that the earliest confirmation that I'm personally looking for is this Bitcoin to SPY chart. And so that's what I'm going to continue to monitor. And with that, guys, remember to subscribe to Joshua's YouTube channel. We want to get him to 1,000 subscribers. Smash the like button if you guys enjoy this type of live content. I always try to get the bulk of the information that I want to share in the beginning of the video, since sometimes when we make these live streams, I'm not putting out the iPhone version of the videos. But so far, everything's happening exactly as we've been talking about. The CME gap was never filled. It was supposed to get filled, but it didn't. Order books opened up to it. This was what we said from the initial dump. After the weekend, we knew, okay, that's on the table. The confirmation was breaking the 2018 previous all-time high support. We got that. So now we're filling that CME gap to potentially form the higher low that we've been waiting for. And we'll continue to monitor the situation as always, snipers. Thank you all for tuning in. Ricardo, Samar, Mala. Do you have anything else to say, Josh?
That's really it. Just make sure you're trading only known support and resistance lines and wait for either a break out or a break down. And that's the best way that you can avoid risk, instead of just blindly entering a position. And last thing I want to say is, always make sure you set your stop loss to break even if you're going to be going to sleep, even if you're going to pay some money on fees, so that's really all I got to say.
I love it. Well, thank you all for tuning in to the Snipers channel for this Thursday update. And remember, we have a 3-day weekend coming up for equity markets. We have a monthly close next week. I believe on the 7th, on Thursday, is when CPI data comes out. So that's something to look forward to. And then outside of that, I'll mention CME gap hasn't been filled yet. So Bitcoin has the potential of coming down a little bit more. Let's monitor Bitcoin to SPY chart. And right now, we're seeing this Adam and Eve pattern play out. So we'll continue to update you guys. Thank you all for tuning in once again. And until next time, snipers out.